Gold just set a new record high, and I totally forgive you if you had your eyes off the market the last few days and celebrated with family over the holidays and New Year, but I gotta get you in on this right now. There's not been a lot of commentary hoopla because perhaps you've been disconnected. This stealth bull run, accomplished without the help of Western investors and just as the Fed is about to make a pivot, will make for a very happy New Year for gold bugs like myself. It seems the entire world is taking the last few days off, but I did not. So I'm here to break it down and tell you where we're headed in 2024 as well as talk about the run it's been on. With gold setting a new record high and flirting with a very key breakout level, I forced myself to come here and shoot this video on New Year's Day to talk about exactly what's going on with gold. A very interesting year ended with gold being up 14%. Yes, that's a nice return on gold, 14%. But it wasn't simple. If you followed this channel, you've seen that firsthand. Despite what's arguably been the harshest tightening cycle in central banking history, gold not only held its ground, but it managed to advance. Yes, the markets were rocky. I know the S&P's at a high, but I think it's fool's gold right now. That's a pun. It's a pun right there for you. And true to the form established over the last dozen months, it's been an interesting close to 2023. So here's a couple charts. First one right here that just shows that gold made 14% in 2023. Very good investment if you were in. And next, here's gold against the S&P since 1999. To me, there is no better thing to have in your portfolio, even just a little bit, than gold, right? Just look at that. The proof is in the pudding, and we're entering bad times, so good time to get into gold. Looking at the past month in the chart, we see the remarkable spike to $2,150 an ounce on that infamous Sunday evening earlier this month, actually last month now that we're in January, and the slam that quickly followed it on the Monday morning. It was a pretty wild ride for a second. The result of that was a shove back to the decline area of about $2,000 an ounce, and the typical calls for one last dive before we soar coming from various corners of the gold bug universe. So let's unpack that a little bit. I was not one of those people, and as gold was going up, I kept covering it, even as traders and speculators started to divert their attention to holiday parties and year-end positioning and talking about the S&P, which is at an all-time high as well. But let's break it down even further. This stealth rally took us to an all-time high record spot close of $2,089 an ounce just last week, and there was virtually zero fanfare in the gold forums or anywhere on financial news sites or social media because everybody was out partying and eating Christmas candy and all that stuff, and I don't blame you. You should take some time off. This rally, like those of the past few months, has been driven not by Western investors, but by central banks and Eastern buyers. We know this because the holdings in the primary tool of Western gold speculators, like the GLD Gold ETF, has been largely unresponsive to gold's fall rally and completely unresponsive to its most recent run higher. Now, as Greg and I have been saying in recent videos, this means there's tremendous buying power remaining in this bull cycle, especially when you consider that Western investors are typically trend following. It's just what happens here. In addition, the central banks can print all the money they want to buy gold, and their appetite seems unlikely to wane anytime soon. Central banks are all over gold, you guys. It's incredible. Record buys last year. Now, from a technical standpoint, it's very simple. It's $2,100 an ounce or bust. If gold doesn't get past that level to establish a clear break from the previous rallies, this one could be a quick little rally that chalks up as a failure. A quadruple peak, as they say in trading terms, if you will. But let's talk about the predictions. People have gold going to $3,000, $5,000, $15,000. There's even some forecasts out there of $75,000 an ounce if we enter a full recession. That's a huge return from today's numbers right now, even though we're at an all-time high. On top of that is that from a fundamental standpoint, the odds favor gold breaking through 2,100 very soon. It could actually do it by the time we get this video edited and distributed to you guys. As Greg and I predicted a few months ago, the markets are now pricing in the inevitable Fed pivot, and considering its stellar performance while Powell and company were eagerly hiking rates, gold stands to be among the biggest beneficiaries when they begin finally the cutting cycle. When that cutting cycle begins, gold's gonna rally even more. It's just what's gonna happen. If you've been listening to my advice over the past year, you are well positioned and you are stacking gold and sitting on it right now. If you haven't, there's a link below. There's some companies we personally work with and have vetted that are precious metals dealers that can work with you, whether you want it for home consumption or in your IRA, which I have myself. In short, it looks like we're gonna have a very happy new year ahead if you're a gold buyer, and we are certainly well positioned for it. I matched up with a company that I rolled over some of my self-directed IRA into gold and even silver. They can do the same for you. If you go to our newsletter site, tageconomy.org, and put your email in, totally free. We do not spam. We send one email a month, but if you do that right away, you're gonna get an email with the exact company that I chose if you choose to use the same one I did. I've been covering this market for over 10 years, have worked with hundreds of companies, interviewed them, talked to them, know the CEOs. Everyone's investment portfolios and ideas and time horizons are different. So take the quiz below, see which one you get matched up with, but know that they're all fully vetted by Greg and I. Wishing you a very happy new year, and let's go gold.